So, David, we've had a couple of shows about this situation, and I cannot wait to get your thoughts. What do you think of AB InBev's move to buy SABMiller?
So, I mean, overall,
This is sorry to interrupt. It's a big company, and
It
you
is.
usually don't go for big companies.
That's
so-
true. Well, I mean, yes, the market cap of the company is about just short of $200 billion. So it's a company that, and the reason that I like it and have recommended the stock wasn't that, Sean. It was just that I look backwards and see 100+ years of a successful company and really a few thousand years of commitment by the human race to beer.
Right.
I look at a company today that has 17 $1 billion beers, 17 different channels for different types of beer at that kind of a scale, and I just look for the next 1,000 years or so. I'm sorry to say, probably not all of which will be living, although we are all living longer and technology proceeds apace. But
Fingers crossed.
I just think it's around forever, and I think it's a really successful company. And I don't really have a strong reaction or thought about Miller. Vince, what do you think?
Well, the issue there is, and what we brought up last time we talked about when this deal was first announced, is I guess ultimately what their position will be just in terms of the regulatory environment and the fact that, as David mentioned, they have so many of these huge brands. Combining that with SABMiller, which commands it has its own strength in certain markets that AB InBev wants access to. When you have this massive conglomerate with that much concentration in terms of its market share and its dominance over the industry, what concessions are they going to have to make? What are they going to have to split off? And it'll be really interesting to see what ultimately, if the deal goes through, what that final entity looks like, where their strengths are, what brands they're able to hold on to.
Yeah, the one key takeaway I remember from that show, Vince, was we concluded it was like they're basically trading SABMiller's U.S.-based businesses for the growth markets of Africa and South America.
Yes.
Their economies are going a lot faster. Their incomes are going up, and like David talked about, it's about the next 100 years, not the next 5 years.
Certainly, there's always regulatory risk when you get that large, and I always like to think about the companies that we're recommending in all of our services being standalones and not expecting them to, in most cases, need to merge or really, hoping that a sugar daddy comes along or there will be some super merger which causes this company to take over the world. So this is just a great company on its own. It's one of the lower risk companies that you can buy. I mean, in Motley Fool Supernova, one thing that we do is we put a risk rating number on every one of our stocks, and it's a scale from 0 to 25. There is 0, lower is low risk.
Yeah.
To be simple. So 25 would be crazy, insane risk. Really a stock that we would never recommend. So, and Apple is a 5.
Okay.
So AB InBev is a 7. And that's a very low risk stock.
Did Apple
from
win
most
because of its
standpoint.
huge bank account?
That's definitely a factor. I mean, our 25-point scale is basically 25 yes or no questions. And we ask those same questions of every single company. And every no is a +1 for risk. In other words, every no means that's riskier. So we only had 7 no's for our system. And I'll mention that for a few others maybe that we're talking about. But it just reminds me that this is a company that plays a solid, stable dividend and is really, if you're a 3+, really 5+ year investor, the chances of you losing money on this investment are very, very low, in our opinion.